All right, I think we can start. You guys can hear me? Recovery today. Present and ready, lovely. All right, recovery. Yeah, nice recovery in the market. The market is back up. At least last time I checked. Let's check again. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Rappel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology for those of you who are live on YouTube. Welcome. For those of you who are new, this is my brief bio. Basically, my background is technology. I was the CTO or executive of several companies that went public, and then we have a team of financial engineers building models. Excel in financial engineering using neural networks. And now we've partnered with Keith, who used to be a market maker, worked for hedge funds. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, trading psychology is important. I encourage you to have a trading plan and keep a trading journal and document all your rules. Let's look at stock forecast toolbox. So market shows overbought, right? There's still kind of a negative. Potentially we can get to 613 level, 615 by going into Christmas, right? In terms of positioning, that's on the upside. On the downside, 590, 590, 592. I agree with the model. We had CPI data today. Looks like, so far, assuming we're going to close at the same level, 10-year yield slightly higher, so showing that inflation is still sticky and persistent. Not persistent, but higher than people anticipated. So yield is up, TLT is down, and kind of rotation into popular trade, right? We kind of trade is on hold. We're rotating into the value stocks. Well, today it's the opposite, right? We're rotating out of the value stocks below 50-day moving average. Percent and semis are finally catching a bit, up 3%. Still underperforming, but nonetheless continue to go higher. Spiders retesting all-time highs. Small caps up. ARK Innovation is up. Gold miners are up. Silver is up. So that's all good as well. So risk on. Very similar trade to the past 12 months. People are actually, again, the leadership is narrowing, right? People are selling all the value stocks for now at the 50-day moving average and rotating into, Teslas of the world. Tesla is new all-time high broke out 400 level, kind of zooming to the 420 level. Meta, similar price action. Amazon, similar price action. What else? Apple, similar price action. Even Google is finally catching a bit. This all-time high. Yay! Google is all-time high despite competition. So Google, so magnificent. We're back to Magnificent Seven, right? Netflix. So all the Magnificent Seven, except Nvidia, right? And Netflix same thing, but Nvidia is underperforming. So outside of NVIDIA, which is a head scratcher for me it's a head scratcher, but everything outside of NVIDIA is in 7. And general risk on high beta stocks. Oh, we have 5 people watching. All right. Thank you for participating on YouTube. Welcome. Appreciate it. Cecile, welcome back. Bob will lead. So what else is interesting? From seasonality, we talked about from seasonality, a little pullback December 11, 12, and then rally starts going to Christmas rally. 81% correlation. Very highly correlated trade right now. The only thing that's left, I think, is what is it? Fed decision on interest rates. I think the consensus is that there is a rate cut in December, and so that's where the uncertainty is. You know, is it 4? Is it 2? Is it 6? I mean, a lot of it will depend on quantum computing stocks. So sorry, that could be the Wall Street next big play. Okay, that sounds good. 2.7 CPI, 3.3 year over year, in line. Okay, we have PPI data tomorrow, and then I think Fed decision is next Wednesday. Any questions? Beta? All right, Bitcoins. Yeah, I mean, it's kind of trading sideways, right, for 4 weeks. Makes sense. Nice volume. Okay, good. Dividend yield, 52% dividend. Wow, they pay dividends? That'll be crazy. Okay. Trying to find out reason for tech rally today. I mean, CPI data is the main event. I don't know, is there anything beyond CPI? Let's see. Not that I saw. I mean, basically, people are concerned about inflation, right, because of the new policy, right, new administration, the higher tariffs. But again, they're not doing anything yet. They're still, you know, and they're projecting, I think, towards the end of the next year for some kind of increase in tariffs against, you know, China, Canada, Mexico, who knows. But, you know, that is not being reflected in, you know, data for November. So, of course, CPI, I mean, it's intact, you know. CPI data, there's not a big negative or positive surprise. I think PCE is trending lower, 2.3, I heard in the news. So, we're getting closer to 2% on PCE data. So, we'll see. November consumer price index in line with this expectation, supporting a rate cut narrative. Okay, that could be reason number one. Gains in meta caps and chip makers supporting broad-based equity market. Okay, good. Shelter index showed the smallest increases of owner equivalent rent. That's good, right? Because the rent has been sticky. So that's, I mean, that's a positive news, because that component of the CPI data that shelter has been stickier than expected. I don't know if that's the reason for this rally, but I think the biggest reason for the rally is this, right? Seasonality. Seasonality, people have cash, they're rotating, fear of missing out, people want to, you know, there's a lot of cash on the sidelines, and people trying to do a catch up towards the end of the year, right? That's kind of a core scenario for December, right? Unless there's some kind of events. Since there's no big events, then that's a path of least resistance. Yeah, TLT is down, DXI is up. Yeah, but they are stable. I agree. But if you look at 10-year, it's kind of, you know, since October, it hasn't gone anywhere. So that's good for the market. Dollar since October, November 11, actually. But really since May, it hasn't, you know, it went down, went up, down. I mean, obviously we need to watch this level. If dollar breaks above 108, 10-year breaks above 4.5, I would say that would be a false rally and false breakout in QQQ. Right. But for now, you know, I guess we trade what we see, not what we think. And for now, QQQ trend continues to go higher. All right, let's see if we want to make any adjustments. So I did do some trades in the past 24 hours. Let's go over them. Oracle. So Oracle, you know, this was a Fred idea. Iron counter. So iron counter, if you did iron counter, you did well. If you had 175, 180 spread, not as well, but I was able to close at $3.30. So still profitable, right? Better profitable, but I think this is. I'm actually, I was a little bit concerned. Right? We were at 170, so it bounced back. I'm out of Oracle trade. If you did the Iron Condor, I would assume you're also out. American Express also bounced, small gain. I think I have too many names, so I closed it. AI, I missed it. I mean, I would put it $1.50. I think it got closer to $1. Right? There's a big reversal in this iron call spread. So we got to 45 actually. I thought there was a high open interest at 48. I thought it will gravitate toward 48, but obviously did not, and it's not participating today. So that's really bad. So I don't know about AI stocks, but C3 is not catching it then, and still remains volatile. So for now, this is an issue, unless we have another up to 45 in the next couple hours. I mean, we have Thursday and Friday. Obviously, it's volatile, but I should have closed at 45. I didn't. I missed it. It was kind of very quick, right? Maybe for, yeah. I mean, I did see it, but I thought it's going to go to 48. Honestly, it broke through the gap, continues to rally, and now it closed the gap. And okay, so for now, that's a trade. I'm still waiting, and I did trim Citigroup. So those were the position trades. Let's see, what else? AI, we talked about AI. We have 2 days left. We'll see, it needs kind of this move to the upside. Still have half of the Citigroup position. I still think this is going to be a rotation back and forth, right? That's been the theme. I think now XLF, probably getting oversold. This is where you probably want to start thinking about maybe adding to some of the maybe either financial stocks or industrial stocks, because it's still a strong uptrend, and I think this uptrend continues. I think it continues, and it's getting short term. It's getting oversold on VTV. So stocks like JP Morgan, Wells Fargo, United Airlines, Morgan Stanley, railroads. NFC got beat up. Railroads really got beat up. How's my favorite General Electric doing? General Electric is not doing well either. Anyway. Yes. XLI. So XLI is similar to XLF, pulling back, overdone. But where's the top holdings of XLI? G Caterpillar. Oh, Uber. I don't know if Uber is transportation. Uber got annihilated as well. Interesting. Deer. Okay, Deer, Caterpillars. So the world, how's the Deer? So okay, so Deer is doing okay. Okay, but I think it's oversold, right? Deer, Caterpillar, maybe something to think about. Microsoft. Microsoft continues to rally. I do have a spread. It's going in the right direction. It broke the downtrend, broke about 440. Google has new chips competing with NVIDIA. Microsoft has new chips competing with NVIDIA. You can see NVIDIA maybe feeling some pressure because of that. We'll see. Long energy, OKE. Similar to industrials and financials, oil, gas, and pipelines, same price pattern, right? 50-day moving average. Still above the elections. 50-day moving average, not making new lows. I'm watching it. If it pops, maybe add to position. Right? Maybe add to position. Did I ever close half of the position? Or not yet. Definitely didn't add to it. So close. Yeah, so I bought it half of the. Okay, so I'm down significantly, 10%. It's a volatile stock, so so for now I'm waiting maybe actually add to the position because I did put a small position. That's okay. ESRE utilities, I think, in the same boat. XLU selling off, also oversold. SRE is doing better, but right at the 50-day moving average. But I think it's getting to these oversold levels, so I need to see if reversal. When will we have the reversal? Twilio and Texas Instrument. Twilio and Texas Instrument. So Twilio is ARC. This is a short-term signal. It's back to the highs, right? Up 4% today. So Twilio is doing well. I'm still long Twilio and Texas Instrument. It's still lagging all the stocks. Not sure why. With all this not bad earnings, and I'm not sure why it's. We might have to wait for the next earnings season that starts in January for stocks like Texas Instrument to catch a bit. All right, United Airlines do have a spread in United Airlines that's doing well, close to all-time highs. And XLF is December position. I'm a little concerned. I mean, it's getting definitely oversold level, but clock is ticking. I have 2 weeks left after this Friday, so I have to make a decision on the XLF spread as well. Carnival Cruise, yeah, Carnival Cruise, nice. I think RCL was a signal. If RCL, similar price pattern, very nice. Thank you, Bob. Keith has WMB calls. Nice move today. Nice. Yeah, it looks like kind of classical setup. Rebounding off of 50-day moving average. OKE is similar price pattern. So if one will rebound, maybe the other one will rebound too. But makes sense. Thank you, Bob. So, all right, earnings. What else is going on in the earnings world? Let's look at QQQ. 525. Let's see, what are the earnings? Are there any interesting earnings after the close? Adobe. It's an expensive stock. That's the only issue. It's a $560 stock. So you have to have a large portfolio to trade Adobe. So if you have a large portfolio, then let's look at, first let's look at expected move. So average move 16%, 16% down, up 23%, very volatile, right? One standard deviation move is expected move 5%, right? So this is where you probably don't want to sell iron condor. This is probably where you want to be long volatility, right? Because expected move is 5%, but historical has been 16%. Right? So for whatever reason, volatility is underpriced in Adobe. Or am I looking at the wrong chart? Sorry. Scratch that. Adobe. Okay. Adobe. Let's try it one more time. Average move 10%. That sounds better. 14 to 13% move. On average 10%. On expectation move is 7%. 6%. But still, if implied volatility is 6 to 7%, but expected move is 10%. I'm not sure, especially on a smaller account, if you want to do iron condors. I know Fred. Is Fred here? Fred is not here, so we don't have to do iron condors. Okay. Obviously, you have backwardation because of the premium in short-dated options. IV rank is also very high, right? Due to the going into the event, it will drop right after the event. Whether it's a volume or open interest or rank, right? That's expected behavior. We know that. Then let's see, put and call ratio on Adobe. Okay, cool. It's pretty high. This Adobe, yeah, 1. So for one every put, there's a call. Is that what we're saying? December 20. Well, depends. Open interest is higher on the call volume. It's a little bit more on the call side, at least the front. January is a little bit vice versa. March a little vice versa. More puts. Okay, so people are bullish short term, bearish long term. You can take advantage of that, right? You can do calendar spread. Okay. And let's see. And then let's see. Let's look at gamma explosion. Okay, so we talked 7%. So you do have 590, 600, 610. You don't really have a lot of volume on the put, gamma on the put side. Spread evenly everywhere. Adobe 600 would be a year-to-date high. It's been up, up, down, down. That's kind of be anybody's guess. It's definitely 600 level. Let me look at the quotes. Adobe. So December 20 and January 7th. 600 level. Yeah, these calendar spreads are very expensive. And so you can sell December 13, right? You can sell this week. There's a lot of open interest here, 12 million gamma. So you can sell December 13 by December 20. The idea that December 13 will expire worthless and it will continue to go higher after 600 level. So that's one strategy. Let's see if you do butterfly. Let's see. Oh, yeah, I would just do that because that's basically $1.73. Still, for $10,000 account, you basically on calls you're risking $200, and on puts you're risking $200. It's a little bit more expensive. But without putting a lot of capital, this is probably the best. Let me see. So December 13th, first leg is 6. So I'm trying to figure out how I can pick the expiration. Microsoft. Okay. Adobe. Okay. Kindle calendars. Okay. But that would be one trade. So 600. So I selected 600 strike, and you can sell December 13 by December 20, right? And it will cost you $1.73. If you do butterfly, well, butterfly is going to be more expensive. So just compare. So if you do butterfly, well, let's say you select 600 strike that you're targeting. 600, 610 to 620. I can actually do it cheap, 40 cents, and spend actually much cheaper than calendar spread. So 40 cents if you want to do butterflies, if you think it's going to get to the 600 level, right? So basically, it has to move that 10%. 10% would be 600. Then Adobe. Puts. Okay, so if we're doing 590 on the downside, so 510 on the downside. Oh, those are a lot more less expensive. Okay, so 510, 595, 495, 480. So it's like with butterflies. They're actually cheaper than the calendar spreads. All right. Any questions on Adobe? DBX. All right, so let's see DBX. Yep, Dropbox is breaking out. That has been the signal for quite a time. We have Adobe Iron Condor. All right, let's see. Ooh, Butterfly, 590, 600, 610, 490, 500 on Iron Condor. Okay, with Keith. Okay. Wow. Two brains work the same way. That's great. Okay, what did I say? I did 590, 610, 630. Okay, so you guys did $10 spread. I did $20 spread. I'm a little bit. I'm paying a little bit more, but I have higher risk reward ratio. So it costs me more money, but potentially bigger profit. I'm doing $20 spread, and then on the put side 510. I did 15. You guys did also 10. 490, 500, 510. All right, so we're in the same boat. We both did Iron Condor. That makes sense. Did Keith say why? I assume because the implied vol is less than historical move. So you want to be long volatility. That makes sense. Thank you, Cecil. So what else is there after the close? what's there? Nothing after close tomorrow morning. Sienna, Eland, Love, Sack. Okay. There's nothing in the Sienna, Love, Sack. Is it liquid? Does it even have furniture? Also pretty volatile. Doesn't have weekly expiration, only monthly expirations. So after the 12/20, January 17. How's the volume in this guy? There's no volume. Okay, so that's not good. How about Sienna? The Sienna should have volume. It's been going in one direction, 2.5 million. $12.20, $12.12 before market open. Okay, so no month. Okay, so there's no weekly options. So same thing, you have to sell December and January. That trade actually worked out pretty well, the one that I did. CRDO, right? It kind of pulled back to 65 and I put on a spread. How much did I put that spread on? So it cost me 70 cents. It's trading at $1.40. Trading at $1.40. And I didn't, the high interest was at 60. I didn't want to do it at 65. If I picked 65, it would have been a bigger profit. But even 60, as long as it did that one standard deviation move, it's profitable. So that's CRDO. This is Sienna. And the same thing, right? Backwardation. High V rank going into the so all of that is the standard put call ratios. Adobe is neutral. How about these guys? 0.5, 0.2. Okay, so a lot more bullish. Right? Not a lot of volume though. But open interest is significantly higher. Call volume significantly higher. Okay. So most of the countries traded at the 80 strike. 80 strike. One standard deviation. Okay, let's see what calendars could be. Sienna, then I would do calendar spread, and I would do buy to open, sell to open. Let's see, two calls. So I would sell December 20. That expires in 2 weeks, on January 17. And the strike is 80. Strike is 80. No, 50 cents, not wide bid and ask spread, 50 cents. It's going to be all-time high. Yeah, so this is, people are betting that it's going to retrace to all-time high. Okay. It doesn't move a lot. Downside, actually. What's the call? Last 3 earnings, the reactions to the downside, and then it goes up. That's funny. Okay, well, here it was continuing to go to the downside. $65 strike. So I'm doing calendar spread since it doesn't have selling to open 20, buying to open January 17, 65 strike, 65 strike. Okay. So that's CN. Any other questions? Alone, Bob, Elite, Cecil. All right, guys, that's all I have for today. I will see you tomorrow morning. Thank you very much. And welcome on YouTube. Please hit the like if you like the content, share it with your friends. I really appreciate it. Thank you.